You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A lot of good stuff in store for you today. If I sound a little bit different, it's because there's no rest for the wicked. I am on the road yet again, but I am beaming through the Chicago studio remotely. We're beaming all over. We're beaming out to Sydney, out to Maine, all over the place, out to New Jersey. A lot of fun things behind the scenes to make all this come together for you guys and to make the live stream run. But that's how much we like you guys here on the network. And let's see who's joining me today to help me discuss all things volatility. First, let's go out to the options mecca of the U.S., known, of course, as Maine, where we are joined by the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show, sir. How go things? A triple-digit threat for you today, sir.
It's just been a busy day. Everything is good, though. Oh, everything is good. Just a very busy day, and I don't hear Overby chiming in about his 20 VIX again.
He had it, and then he lost it yet again. It shows just what a capricious mistress the VIX is and Spikes is.
Fickle mistress.
Yes, at the end of the day. Volatility, a slippery pig to wrestle. That's why that segment is so fun and indeed so challenging. And also joining us a little bit closer to home, a little bit farther down the coast there. We go down from Maine. We dial that volatility clock handle down the coast a bit, down to Princeton, New Jersey, where we are joined by Mr. John Smollen, the EVP and head of Exchange Traded Products and Strategic Relations. Say all that 5 times fast, listeners, over there at MIAX. John, welcome back to the program, to you as well.
Fantastic. Thank you for having me. Excited to be here.
And you know what? We're not done yet, listeners, because rounding out our volatility ensemble, we're going all the way across the pond there to Sydney, Australia, where he is up. I believe it is 1:30 a.m. No, it's a little bit later than that, but not too much. Mr. Simon Ho, the CEO over there at T3 Index, a.k.a. the Spikes father himself. Simon, welcome back to the program. Have you had your coffee today, sir?
I have indeed. All set. Thank you for having me.
All right, it's good to have you on. With the gang all assembled and a couple extra, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly what the name says. We review the volatility that is popping off out there. There's a lot to talk about today. I believe it was yesterday on one of our programs that the Rock Lobster pretty much said he was aiming for a 15 or a 25 out there in volatility land on the heels of all this trade war kerfuffle. Will we be friends again? Seems like the market seems like we think we will be. Fed also stepping in there as well with some balance sheet action. All that combo combining to put an exclamation point here on the end of the week, at least for the bulls. It's been a pretty bullish week overall for most of the week already here. And then coming into the end of the week, it's just a strong exclamation point. Most of the major indices up and up firm here on the day, well over 1.5% now. NASDAQ leading the charts to the upside, up about 1.8, almost 1.9%. We've got the S&P up about, laggard actually, up about a little over 1.5%. And we've got the Dow about a similar level, about 1.55% or so. Gold taking a bit of a break, as you would expect, as it has through most of the week, breaking that crucial 1,500 level. Got crude oil continuing to tick up, which is kind of interesting. If you listened to TWIFO yesterday, we talked a lot about that on yesterday's show. And, of course, our old friend Spikes coming off, as you might imagine, from the last show, was at a 16.5 handle coming into showtime. Has given up more of that since then. It's at about a 15.9 now. So that puts it down over 2 handles from this time last week, about 2 and change from this time last week. We're seeing similar levels out there in VIX land as well. VIX right now at just a tick shy of the 16 handle. That puts it down substantially from last show as well. So we were it was coming into showtime, it was almost 16.5 in VIX cash as well. Now we're a little bit shy, about a tenth of a shy of the 16 handles. That puts us down not quite 2 points, about 1 3/4 points from this time last show. And our old friend VVIX also taking a break. If you listened to yesterday's show, we were pretty frothy, pretty elevated over that triple-digit level. Today coming back off that, down to about a 95 again. That puts us off about a handle from where we were this time last week. Let's go around the board. Let's start with Mr. Smollen. He hasn't been on in quite a bit. John, lots been lighting up your tape. I know since the last time we talked. Since the last time we talked, we actually have a final day, or expected date, I should say, for the future. So that's a lot for you guys to work on. And also, it seems like you got some interesting numbers just coming out for MIAX across the board there on the option side as well. Seems like September was a pretty robust month for you guys over there, John.
Yeah, no, everything that we've been kind of driving towards for the last couple of years, starting to show a lot of traction. All 3 of our exchanges are participating in the market in a way that we're pretty happy with. Again, it gets, as we roll out functionality, we get in the right lane, and we're able to compete. We think on a head-to-head basis we'll do well. As to the futures product on the Spikes option, November 18th is still the target date. Still things that could influence it, but we're pretty confident. We have a high degree of confidence in that happening. And, the team here, as well as Simon and his company, are out working very hard to get the futures side of the world excited about Spikes. We're working on both the buy side, sell side, liquidity, and I think the path we're going to go is going to be very, very positive when we launch next month.
How exciting was it for you to finally get that date? I know you were thinking October, you got November. Obviously, nothing's final until the CFTC says it is. But how excited was it for you guys to finally get that pre-stamp of approval, I guess?
Well, the pre-stamp is exciting for sure. I mean, been experiencing this for a long time, both from as an exchange user and now as working for an exchange, that it ain't over till it's over, Mark. And the light at the end of the tunnel is actually a positive one and not a train coming at us. So it's good. And as an old trader, I never ever totally relax. And I'm assuming you hope the best, you assume the worst, and you just keep grinding. And when we get that first trade done, then we'll be able to kind of pat each other on the back for about 10 minutes and then go to the next thing. So,
I like that. The light is not a train coming down the tunnel edge. I may have to borrow that at some time there, John. Just so hopefully your licensing rates are reasonable. Yes. We also have, like I said, Mr. Simon joining us from across the pond. It's been a while, Simon. I think it's been, 2 years since you've joined us here on the program. What's been lighting up your tape? And same question for you. How excited are you to finally see the Spike's future clawing its way to life, sir?
Yeah, well, obviously that's just awesome. I, of course, being a male, I've never had a baby, but it kind of feels that way. This thing has sort of been going on, and I'm really excited about the fact that it's actually, now just within earshot for us.
Well, you are the Spike's father, sir, so take that into consideration.
Well, yeah, exactly. Obviously I share John's enthusiasm. It's very exciting. I mean, at the end of the day, we've actually done some decent volume since we launched. Obviously, it's been hampered significantly by the fact that there's not an easy way to hedge, and that's by no means a trivial issue. So this is it's a game changer for us as well. Earlier this week, maybe you missed on this one, but in addition to the announcement of the futures contract, is this week we offered tide trades as well. So I understand that about 80% of VIX options that are done with a hedge are done on a tide trade basis. And so that's a big step forward for us as well. So now anybody who wants to do a trade, they can do it delta hedged with the synthetic combo. So we're getting all these things that are coming online. And, as in terms of a breaking thing, there's discussion also at a preliminary stage about, maybe a spikes related ETF as well, which would be very exciting. That would kind of round out the whole complex. And so it's exciting times. We're looking forward to it.
Yeah, that is interesting. You're right. The hedging is a big component of it in the tide trades, and yet obviously you don't have the underlying yet to offer that. So walk us through that really quickly for our listeners who didn't hear about that this week. You kind of just wrapped it up a little bit. So effectively you guys are allowing people to tie them and providing the synthetic to tie to it. So effectively providing that sort of tide future functionality in lieu of the future.
Yes, exactly right. So, if you want to buy a call option, say, on spikes, and you want to do that in a way that is delta hedged, one way that is typically done is to do it, as we say, with a tide trade. Now, the piece that is tied to it is actually a synthetic combo. So it's a long call and a short put, for example, at the same strike, which effectively gives you a delta one position or short. So that's a very handy device. And as I mentioned earlier, the bulk of VIX options that are done with a hedge are not typically done with the future. Most of them are done in this way, with a synthetic combination attached to it. So yes, it's a big advance for us, clearly, and it's something we've recognized. Obviously, we knew that would be a headwind for us not having a hedge. After all, people could hedge with a VIX future, for example, but most people have chosen not to do that because it entails basis risk and so on at the settlement auction. So this is a nice seamless way where you basically have one that you can connect with the other perfectly.
And I'm used to the brokers offering that out there in VIX land. This was something that they were unable to do until this point here. In Spikes, they couldn't go out and offer, let's say, tied with a combo. They couldn't do that on their own yet?
No, it's a process that has to go through the SEC, and that took quite some time. So, yeah, we had obviously been hoping that we would get it sooner, but this like everything, it takes time and has to go through the proper channel. So it basically just was literally rolled out this week.
It is, I'm sure, fascinating to a lot of people listening who aren't, knee deep in the weeds of regulation like you guys are, to think that they could approve a product like a spikes option without implicit in that approval being the ability to do combos and synthetics, right? You think that would be no-brainer. That would be part and parcel with the approval. But apparently that's an additional level of approval, which, again, just shows the devil truly is in the details, listeners, when you are launching a new product. Mr. Rock Lobster, first off, how crazy is that? You couldn't even do a combo until recently. That just shows how much minutia there is in launching a new vol product. And then in addition to that, what's been lighting up your tape and the tape of your crazies over there in the pit chat these days, sir?
I am not. I obviously the MIAX is in there. They're saying things. They're talking to regulators, so I'm not going to say anything. But I think it is a little odd that they have to go through so much work just to create the product that everybody pretty much wants them, to make. You would figure that the combos and futures and everything would be a layup because you need an underlying to those options. But I have all kinds of. That's a separate issue. As far as us going. They're taking the ball down pretty hard considering we don't have any announced deal. I don't know if anybody's noticed, but we're at that same almost 3,000, VIX just below 16. The spikes evened everything, crushing everything. And you're sitting here looking at it like, who blew this whistle? I must have missed it. Treasury's down a ton. Also, vol just getting totally smoked today. And I'm starting to go hunting for vol looking the other way a little bit at this point. So I think it feels early considering every time we've gotten close, nothing's happened. So I think it is a little early, and I look forward to having another vol future out there. To be honest. So it's nice not to have a monopoly on what's going on. So, but besides that, we're seeing a massive implosion in vol. It kind of reminds me of what happened before Brexit. Remember the Brexit vote? They took that poll and everything was cool. And
yeah, I was just going to say the same thing. This has the whiff of the pre-Brexit crushing to it, does it not?
And then it just went right up everybody's keister. So I definitely have pulled off a ton of vol belts at this point, and I'm totally happy. But nothing will surprise me with this administration just going into the weekend and just whatever could come up. But at least right now, it's a pretty heavy sale. If this deal comes out, I wouldn't be surprised to see all of our vol indexes with a 13 handle by the middle of the week.
I'm glad you said that because I had the same thought when I first started checking and logging into things this morning as I saw them coming for it. I thought, we must have a deal. Then I started digging through the news, and I said, no deal, just a little Brexit action. So I had the exact same reaction. They're certainly quite optimistic, and we've been down this road once or twice or 10 times by now over the course of the past year and change. It is interesting to see how aggressive. They're treating it like it's a real holiday weekend, Mr. Rock Lobster, like Monday is a day off, right? They forgot we don't get that here in the States anymore. So no. Maybe that must be what it is. They think we still get Columbus Day off. That's what it is, or whatever it is.
Yes, in Maine it is now Indigenous Peoples Day.
Yes. You can't even say Columbus Day anymore.
The Italians had one day. We don't even have that day anymore. We got nothing.
Italians get nothing now. You and I, sir. We're left on the sidelines yet again.
Just with pasta and sauce. That's it.
We'll have to console ourselves with delicious spaghetti and meatballs. All right, let's look out here to the VIX futures. Kind of another interesting week out there. Coming into Showtime, VIX has obviously come off even more since then. Coming into Showtime, we were a little bit shy of 16.5, about 16.30 in the cash. And we saw that front OC future. It was actually below the cash, so the cash was a wee bit backward to the futures ever so briefly. It was about not that much, less than a quarter of a point difference between those two. Going out to NOVs, going out to 2 months out there, we saw it was not quite 2 points to the NOV future, about 1.8 points. Anything catching your eye out there this week, Mr. Rock Lobster, from a VIX futures term structure perspective, sir?
Well, all week it's been flat. And you know what? I'm going to look forward to another future term structure to totally confuse my students with.
Don't go too far down that rabbit hole because we have a listener question on that exact topic.
I can't wait to have a competing term structure because of course I have all these theories and fair values and all this kind of stuff, and it works pretty well. But it will be good to see. It will be good to see how this percolates up in another place. hugely flat term structure all week, like crazy. I blogged about it, things like that. And pretty much the move that it was predicting a big move in vol. Who knew? And we had the move was to the downside, at least so far, not to the upside. And right now we have what I would call, we are approaching a very normal contango for this part of the cycle. And to be honest, like the product I think that could get wasted the worst next week is VXX. It's going 100% into the November future. I'm loading. I've got some leverage for that next week. I mean, the thing is, we see the 13 handle. VXX is going to get annihilated next week. Or we get the breaks it, whatever, and VXX is back to 30 again. So it's a very dependent on that November future. It's the sweet spot of the cycle for the product as far as high gamma type movement. And it could be, I don't know, can't wait. It'll be kind of cool to see what happens. And, either I'm right and I get to buy my wife some Christmas presents, or I'm wrong and I watch all my juice down. So we'll see what happens.
Yes, the death of juice. We've all been there. But you have a lot of questions about the spikes futures. Obviously, our listeners got it on the brain as well. We'll get to some of those in a little bit in the vol voicemail. All sorts of questions about the futures. Let's look out here. Speaking of spikes, let's look at the options out here. Last week was, of course, the big trade. Our friend out there in 1x2 land apparently deciding he didn't have enough of it. It was interesting timing, too. I talked about this with Mark on the show last week. He came out kind of in the middle of the week and put that 1x2 on for more size. You would think he would have taken advantage of the spike, pun intended, in volatility to take maybe some of that off, to do the opposite, to unwind it. Remember, listeners, it was the NOVE 1827. He had it on for a decent amount of size. Then he added on another 7,500 by 15,000 last week, bringing his total now out there on the OI to 27,123 of the 27s and then 13,500 of the 18s out there for the number 1 and number 2. Number 3, we got the OCT 30s with about 3,500. Number 4, we've got the OCT 20s. So a little bit of call palooza out there. And number 5, got the NOVE. What we got? NOVE 19 calls. Interesting stuff. Simon, did it surprise you like it surprised us that our 1x2 friend came in for more last week? And maybe a corollary to that, we got to see some put love out here in spikes. When's the spike put love coming, sir?
Well, hopefully soon. Now that we have side trades. But no, in terms of the action last week, I guess it's been so topsy turvy. Everybody thinks on the one moment the trade war is going to worsen, and the next minute, as we see from today's action, everything is fine and dandy. So. Look, I guess a 1x2 is a very efficient way to have some sort of tail risk exposure. So the fact that he added more to it, I don't think it would make a material difference really to the goals of that investor. I reckon if he's doing it for that purpose.
Yeah, my first blush when I saw that trade go up is, he obviously unwound it, took advantage of the pop to take some off. But nope, he likes it. He wanted more. He's got quite a bit of it on right now. So interesting stuff afoot out there. Anything catching your eye out there, John or Simon, in Spike's options land over the course of the past week?
I think. Go ahead, Simon. You go first.
No, you go.
No, I was just, most of our, our travels have us talking with the market makers and beginning to talk to some of the buy side. And I think people have been very patient waiting for us to get the futures product up and running. And, we're, as you guys know, as former traders, that the better the underlying we can get, the better the options market we can get. And we think 1 and 1 are equal, far greater than 2. So the futures is the main focus right now. And then the options market will really enjoy the benefit of it. So that's where we're at right now, Mark.
Let's keep on rolling then out there to the rest of the vol options complex. Interesting day out here in VIX land. Interesting week. Not the most action-packed week until you get to really today and then one day earlier in the week. Let's start off, as we are wont to do, looking at the top positions out here in VIX land, the top 10, number 10, OCC 40s. So it costs you almost 150,000 contracts to get into the top 10 these days in VIX land, about 142,000. OCC 40s, number 10, number 9. OCC 16 puts, our first put on the list, 148,000 there. Number 8, the OCC 26s, 162,000. Number 7, the OCC 28s, getting a little bit of a nice, healthy OCC call strip going here for 167,000 there. Number 6, 175,000 of the NOV 30s. Number 5, 176,000 of the OCC 30s. Number 4, the OCC 15 puts, our second and final put in the top 10 here this week, 191,000 there. Number 3, the first DEIS on the list, the DEIS 21s, first and only DEIS for 212,000. Number 2, back to OCC again, the OCC 23s, 220,000, rounding out the top 10 here. Number 1 with the bullet, 278,000 of the OCC 25s. That shows you kind of where we are from a volume and OI perspective. Only not even a little bit north of 250,000 to get you to the number 1 spot out here in VIX options lands these days. Total of just a tick under 8 million contracts open out there. That puts us at about 6 million on the calls and about 2 million on the puts. Let's scroll out to what we saw going on out here this week. I like to start at the beginning of the week and work forward. It makes a little bit more sense, I think, than starting today, even though today is one of the more active days of the week. Not a lot going on earlier in the week. Monday was actually a pretty paltry week, 169,000 contracts only going up. The most interesting thing going up out there actually was a ratio, looked like a ratio risk reversal. OCC 17, 18, bullish risk reversal, it seemed like. Again, I don't know exactly. Maybe it was bearish. I'll have to look into this execution a little bit. But it went up 8,500 times on the puts and 17,000 times on the calls, doing them for $1 and $1.20 respectively. These went up pretty much right mid-market on the puts and on the bid on the calls. Of course, the calls are pretty tight. So that could be a bearish risk reversal. But usually we see it going up the other way. But then again, with expecting a bit of a fade here for vol, then maybe Monday wasn't a bad time to put on a bearish risk reversal out there. Also saw a bit of a NOV call vertical, the NOV 32 half 30 vertical going up 8,557 times for a whopping 9 cents. So maybe someone rolling down a little bit. That was pretty much most of the interesting action going up on Monday, pretty light day. Tuesday, a little bit more action. In fact, it was the most active day of the week. Obviously, today's not done, so we don't know. But at least so far, Tuesday was the big dog. 687,000 contracts on the tape. The big print was the OCC 23s expiring on the 9th. So these are already gone. 35,000 of these bad boys going up for 15 cents. Maybe someone had some of those left, and they decided to get what they could for them before they went out. Either way, 35,000 of those bad boys going up right off the bid. 26,700. The NOV 30s going up also about mid-market there on those bad boys. And the OCC 30 calls. So actually, that was a roll. Looks like a bit of a spread/roll. They both have the same size, 26,700. So maybe taking some OCC and rolling it out to NOV. That makes a wee bit more sense. Let's go out here to Wednesday, a little bit lighter day again, 269,000 on the tape. The big print was actually a funky one, an OCC Jan, and they call it maybe a ratio diagonal. Maybe our scanner is missing a leg here. I'm not sure. Either way, though, it's a weird one. OCC 25s going up 10,000 times for 24 cents right off the offer against 7,600, so it's not even a straightforward ratio of the Jan 55 calls, the Jan double calls for 21 cents. Mr. Rock Lobster, does that one get you excited from a vol perspective? An OCC 25 Jan double ratio diagonal, is that a popular option pit trade, sir? Is that the Rock Lobster special?
I have to assume that's got to be a roll, right?
I guess that's a hell of a roll. He's going out to 55.
That is I don't even know how to describe that trade.
Welcome to my world, sir. Having to parse these things.
I'm sorry. I'm like, how? But another thing, like when people use VIX, do they know how like the Jan options work? I mean, I guess they want them for like long-term protection, but I mean, the market could do a jillion things between now and January, and those options move like $3 cents. I mean, because of it takes so much for that Jan to move. So it's a Jan OCC spread, unless it has to be some kind of the OC almost has nothing to do with the January. It might as well be different products.
Yeah. You can't even call it. You can't call it a roll. It's like rolling from spikes to some little biotech stock. They're not even the same thing. It's a completely different beast. So yeah, I refuse to call that a roll. Maybe I'll call them a time-related trade. How about that? Otherwise,
it is a trade with time in it.
Yes. They went up at the same time. That's about all they have in common, really. There has to be some leg that was buried in there that our scanner didn't find. VIX. A lot of the forest is buried between the trees there, and maybe there's a funky leg that makes that make more sense. Either way, it doesn't make a heck of a lot of sense right now. Looking at that's Wednesday, the big print out there was 10,500 of the NOBE 47 halves going up. Back to Thursday, a little bit more action. Not a ton of action this week, really, given the fact that we saw some vol coming in pretty hard. Look like we have this is actually a roll, Mr. Rock. I would qualify this as a roll. OC DEES 1821 put roll, effectively rolling from the 18 puts in OC out to the 21 puts in DEES, doing it 13,000 times and doing it for close to $3. About actually 304 exactly. So I would call that a roll, Mr. Rock Lobster. That other OC Jan monstrosity, that does not fall into the traditional definition of a roll for me. So that's a Franken beast.
Yeah, I like the whole sound of the Ocjan roll. But anyway, and what are they trying? Okay, so this one actually has a. This is a little interesting, and I'm trying to figure out, okay, did they close their October 16, 18 puts today, and then buy those 21 puts for $389 in December? And that's another head scratcher. Like they're buying the 21 puts to look for a 12 handle around Christmas time. I mean, I could see that. Maybe they didn't quite make their money, or they made some money on the 18 puts, but the OC 18 puts never got that cheap this cycle. I would almost guess that they're buying, if they're buying the 21s and Ds to sell the OC 18s just going into this cycle, that has a trade that has massive gamma problems on the 18 put. The only thing I think is if they've taken whatever little dollars they got out of their 18 puts and they're rolling into December and they're spending a heck of a lot more money. So that's another roll that is fraught with explosive juice there.
You don't usually see people rolling to a much beefier contract like that. That's a weird one there as well.
And if they actually did this thinking that the October 18 puts, it was like a buy right, they're going to be sadly mistaken, because those 18 puts today, I just sold some for like $2.40. So the whole thing's going to blow up, and that December probably has only moved 15 cents or something like that. So that as a kind of funky downside buy right, I don't see how they could be taking it on the chin just right at the beginning on that roll if that was open.
So what you're saying is both of these trades now have followed the instructions from your newsletter to a teaser.
I'll tell you what, I could have saved them a lot of money if I'd just taken a $100 class. They
yeah,
have done these stupid things.
That definitely that Ocjan quote unquote roll could have used it. And yeah, this rolling such a beefy Dees put, not my preferred MO on that one. Especially if it's opening, I have to assume it's a roll. If it's opening on the OC, then it makes even less sense. Let's see here. And today, actually, a pretty active day. It was about exactly 500,000 contracts coming into showtime. That has ticked up to closing in on 600,000 now here. With the big print today are the OC 14s. Actually, is this is the spread? Yeah, actually, no, it's not a spread. This is the OC 14 puts going up for a whopping 7.5 cents. 33,000 times. And then we got the OC 14 half puts. Looked like a spread earlier on, but it's not. Going up 20,000 times for 17.5 cents. So not a spread. They went up looks like about an hour and change apart, but still interesting stuff. The interesting print today was a bit of another funky risk reversal, Mr. Rock Lobster, out here in NOVE. NOVE 1626 risk reversal going up 18,500 times here, with the puts going up for 93 cents, so close to the offer, and the calls going up for 60 on the bid. So another looks like maybe two decent-sized bearish risk reversals going up, Mr. Rock Lobs. This one went up earlier in the morning, 1026. So if that's the case, you got a decent little fade on here in this, or maybe he's got some futures and he wants a nice little collar on it. Either way, though, I think that one, at least so far today, Mr. Rock Lobster, has probably worked out.
Yeah, I think it's a little there's a little bit better, and I think people are looking for. And I think I'm guessing anyway. There's some people starting to fade this whole trade war thing, but it does look like that trade worked. I don't know if it's tied to any future, but right now it looks like it could be pretty good.
And Simon, before we roll on into some other products, anything catching your eye out here in the broad volatility space from an options perspective this week, sir?
Yeah, the thing that stands out to me, I mean, obviously we've had vol come off quite substantially today, and that would make this trade perhaps less appealing to some. But I'm looking at the VIX Central website and just taking a look at the term structure right now. There's nearly a 13% difference between the first and second contract. That's pretty. I mean, despite the fact that the headline level of VIX has come down, that's a huge amount of carry. In fact, I've seen as much as 15%. I mean, I must say I don't pay strict attention to that all the time, so I'm sure it's gotten higher. But this is certainly towards the upper level of it, and so maybe, I don't know, for those people who trade ETFs who think that we are in some sort of better shape with regards to the trade war, TVIX or UVXY shorts probably look pretty enticing, just purely from the carry that you can get from that roll. That's what stands out to me.
Shorts and UVXY, your buddy Mr. Lincoln there, Andrew, he's going to be, his ears are perking up right now. He's getting very excited. What do you think?
I think I think he's been waiting for this drop for about 2.5 weeks, so he's finally got it.
He's partying and celebrating somewhere out there. Anything catching your eye?
He is partying Cape Cod right now, yes.
Aside from these trades we just talked about, anything interesting catching your eye from a VIX options perspective this week, Mr. Rock Lobster?
Not a whole lot of. It was a very eerie kind of like funky sideways week. And mostly, I didn't really see, I didn't see the upside bid for a lot of, every time we got to 20, usually when it looked like we got flat, there would be something, but it was mostly just almost everything I saw this week had been profit-taking. Closing out big puts in the SPX, closing out calls in VIX on the rally, all that kind of stuff. It's mostly just closing paper, and I think that's, you didn't get any real, what I would call big explosion in, VVIX prices or vol of all. Considering we thought all these moves were crazy, the moves for the vol products were kind of muted, actually. So that would be the only thing I'd say as an observation.
Unless you count all those crazy rolls up to the Jan double strike, then, of course, there was a huge explosion in madness. All right, let's go out here to another product you guys love, or maybe love to hate, depending on the way you trade it. I know from your feedback, probably the latter. It's VXX coming off again this week after spiking a bit, again, pun intended, earlier this week. They hit, almost 27 this week, right, Mr. Rock Lobster? 26 and change?
VXX?
Yes.
Yeah. Yep, and it's it was the most pathetic rally ever. Those profits. The market literally looked like it was going to zero, and VXX was up $2. Where's the good old $10 days? And I have to, and I know this is a closet theory, and I know you have more tinfoil hat guys, but I think the XIV SPXY implosion has really changed the vol of VXX and the futures, and just all that volume not being there, it's a lot less swingy of a product. It's changed the way I've traded it, and all I know is it feels like it has a lot less volatility. And honestly, I think those other products are really, artificially smacking it around a little bit. Not artificially, but because they had those huge holdings. But you're not getting the you're not getting the moves. I mean, look what the moves we had in December when the market was down, 20% at one point? I mean, VIX could barely get over 30, right? And the futures were so muted on that move, 25, 26 tops. And literally, on day before Christmas, we looked like we were going to zero. So it's just, I think those products going away has changed the landscape a little bit. That's, again, just an opinion, but something's changed something, and that's the only big thing that big product that I can see that's fallen out of the sky.
Yeah, something has definitely changed. What's weird about VXX, and again, it's off nearly 2 points again from our last show listeners, down 1 3/4 point at about exactly at 23 coming into the latter portion of the show here. And I won't even go into the top 10 because I keep fixating on this number one. Someone, Mr. Rocklobster, someone out there is throwing away a lot of money week after week for size here in VXX. Last week, it was just far enough out of the money puts that they went out worthless, and it was for size. I think it was the 7 set put strike. And this week, the number one position in VXX are the OC 27 calls going out on the 11th, going out today. So 43,000 of those bad boys. He could be overriding those, but I'm assuming, given the paper we see in the past, that is not the case. So someone is going in, despite everything we say about VXX and some of the longer-term plays available out there, someone is piling in to the very, very near portion of the term structure and throwing away a ton of money week after week. So my question for you, Mr. Rocklobster, is that you? Is that Carmen line?
No. No, because I'll tell you what, you can waste a lot of money in the short-term term structure of all products lately, especially intra-week. There's a lot of sadness around and buying juice in there.
VXX has been a boulevard of broken dreams lately, at least looking at the options open interest here. The big trade of the week, and today at least certainly, is a 1x2 on the put side. OC 2221 put 1x2 going up 6,700 by 13,400 times. Looks like they did it for 25 cents and 9 cents, so a whopping 16 cents here. Opening on the 21 put, so they could be rolling too, but it has that a little bit of a flare. So OC 21 puts, that's still fairly aggressive, but then again, given what we saw this week, it is not out of the realm of possibility. As we keep on rolling, it's time to get some of you folks here on the old program. You got a lot on your brain, including the future, so let's get to it with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. You guys get to take the reins. Lots of questions here. Let's start off. I mentioned, in fact, Mr. Rocklobster, you touched on this exact thing at the top of the show. First off, they want some they got a bunch of questions about the futures. I guess the audience, John, clearly fired up about all things Spikes futures. First off, from Talos, he wants to know, do you guys have the specs yet for the Spikes future? So Mr. John or Simon, whoever wants to jump in, what can you tell us about the contract specs and all that good stuff? Inquiring minds want to know.
Yes, we have all the product specs and readily available. You can get to through the Minneapolis Grain Exchange, the MJX Exchange, our partner in this. The MIAX, there's a lot of information that's available on through the MIAX website. And then, of course, anyone that wants to reach out to me directly, myself or someone on the business team here will walk you through it. But we can reach in. We have a direct DL sales at MIAX options. We can get directly to us. We can get anything out to anybody right away. So all that's out there. It has the same look and feel as the if you're familiar, anyone that trades VIX, you're going to look for some stuff in the near term on pricing, and then obviously on liquidity that we'll be putting out shortly.
Talos, I'm looking here right now on that page we always talk about, the MIAXoptions.com/spikes page. If you scroll on down there, you'll see right next to the options contract specs a whole PDF on the futures contract specs. So for you and everybody else out there who has that question, MIAXoptions.com/spikes is the place to go. We've got a related question here, and actually this also touches on what you were just talking about, Mr. Rocklobster, earlier in the show. This comes from LH65. He or she wants to know, first out, how far out will I be able to trade the Spikes future? So another contract spec-related question. And then this is exactly what you were just saying. How do you expect the term structure to shape up? Thanks for this program. You guys are the best. So I think that's kind of the $1 million question. That's what everybody is waiting to see. Simon, this is your baby. First off, if you want to address how far out the futures are going to go, have at it. And then B, I think a lot of people are excited to have another future in the space just to see the answer to that question. How is the term structure going to shape up? Is it exactly like we're going to see with VIX? Will there be some nuances? So what are you expecting on that front as well?
Yeah, well, these are very good questions. So as you mentioned, if people want to get the actual specs, they're listed on the MIAX options/spikes page. So that's all there. In terms of how far out, well, we're going to be starting. So as you know, November 18th is the date that we launch. To begin with, we'll probably start with 3 contracts, and soon thereafter, we'll get it out to six months worth of contracts. So that's going to be a progression thing. Obviously, we want to focus liquidity on the first 3 months to begin with. In terms of just very, very briefly, before we get to the term structure question, which is actually extremely interesting, in terms of the contract specs, I mean, we are as you know, we partner with the MGX exchange, and that is powered by the CME. So basically, we're very fortunate, the GlobeX platform, that we can leverage of that. So we'll have daytime and nighttime sessions that will be available. So as John mentioned earlier, we're talking to liquidity providers to partner with us on that. There'll be things like calendar spreads and all that kind of stuff. But essentially, the basics will look the same. It's a $1,000 multiplier, for example, for the future. The ticker is SPK. And we will be trading essentially, during the day, but also in the night session. And of course, it's powered by the CME GlobeX platform. So that's the futures. In terms of the term structure, that's a very interesting question, and it's a kind of a who knows TBD type of thing. Now, ultimately, these two indices, the cash indices, are very closely correlated. However, as we've mentioned on the show before, there is a difference between the two. We use SPY, not SPX options. And the difference here is that SPY options are American style in nature, and SPY also has a dividend. So once a quarter, you'll find, and we coined this word on your show, that it becomes pregnant with a dividend 4 times a year. Now that gives spikes, or SPY at least, a slight vol premium relative to, say, SPX options, which are the S&P 500 index options. So there may well be a difference. I mean, I think the difference, this is purely speculative at this point, would be fairly minimal, but I do think you will notice some slight difference between the two futures. And the term structure, I think the shape in general will be very similar, but there might be some blips in the curve. That's my expectation.
Yeah, that doesn't surprise me. Mr. Rock Lobster, you were just talking about this. You concur? You think it'll be a radically different beast? What are you expecting when we finally get to sink our teeth into the term structure on Spike's futures, sir?
Well, I guess the short answer is vol in the future has a time component. So I would expect time in the future to be worth more. But I just ultimately, I'm not a mathematician on this, so I'll have to see how all of it shakes out. But yeah, I guess if there's, the spikes are still like a 30-day product, so I guess there is some funk with the dividend. But depending on how the IV gets priced out, I have to look at this. Obviously the MIAX guys know more about the spec than I do on it. But I would assume there would be some sort of contango in the future. But that's what I'm looking for anyway, and see if there's anything really arbable in there, because if there's really any real statistical anomalies, like a Citadel will figure it out, in a week and bash it all back into shape. So anyway,
they are known to be bashers. All right, let's wrap it up with this one. It's actually a good question. I like our audience; they think of things in interesting ways. This comes from Erik Norstedt. He says, "Hi, Mark. Great show." Well, thank you. Thanks for the love. He goes on to write, with some of the major brokers offering no trading fees, do you think this will lead to an increase in volatility since traders can now trade more? It's an interesting question. I have to admit, it's not the first thing I thought of when I saw all these major brokers, including Fidelity on our Option Block show, all racing to that zero commission side of the fence, the impact on volatility. But if you think about it, all things being equal, no major aberrations going on in the underlying or in the marketplace, just the increase of more retail, he's talking about retail here, these are retail brokers, an increase of more retail coming in and hitting bid and lifting offers, that should, if anything, that should actually tamp down vol a little bit more liquidity, a little bit more volume out there should help settle things down, I would think, rather than the opposite. But I'm kind of curious, Simon, you're our theoretician here on the program. What do you think here? All these retail brokers slashing fees, is that going to have any impact on volatility?
I think it'll be marginal, to be honest, because it's a very competitive business as it is. So I don't think fees are really the main determinant of whether an investor wants to buy or sell something. I think really it's the trade they want to put on, and, whether brokerage is X or, 0.8 of X, I don't think it makes a huge difference. It is an interesting concept, though, because the idea, I suppose, here, the germination of his idea is that the lower the fees, the more inclined someone is to do some trading, because there's marginally there is no cost, there's no friction whatsoever. So it's a very interesting thing. I would hope that would be the case. I mean, if people are lowering prices, you tend to find that the function of consumption definitely increases, but potentially at a decreasing rate. So I think there's something to that. I think it may improve volumes, but I don't know that it necessarily has a knock-on effect into the volatility of the underlyings.
We've actually been having, we've had a few kind of meetings, as this has kind of developed as to where this could go. And it's very interesting. I don't know if you'd see as Simon referred to it, as we'd see a marginal uptick, but I do think at some point it will begin to affect the market in some shape or form. How is there a redistribution of how fees are actually found and captured in the industry? Does it create a different downstream model? Certainly, the idea of a slew of large public companies losing a fairly significant revenue source, they generally don't. They look for other ways to recapture it, and I'm interested to see what happens 3, 6 months, a year down the line of how they recapture it. I think it's going to be this change is permanent, but where it eventually shows itself, I think will be probably the middle of next year. You're going to see where the implications of this change really show up.
That's true. It will be interesting to watch. We know brokers like to get their revenue streams, if they're not getting on the front end, maybe on the back end, payment for order flow, somewhere else that fee will probably materialize, that revenue stream will probably materialize itself. But again, the devil is in the details. We will have to wait and see. But you will not have to wait any longer to hear our volatility picks, listeners, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. This is the portion of the show where we tell you what we're thinking for vol for the coming week. If you missed it last week, the Rock Lobster was at a very paltry 9.97, so he lost horribly on the show last week. I, however, got a rare bullseye. I was within less than 0.1 away, which is, on this show is a bullseye. So that was a nice, fun one. Let's see. Let's fast forward here. Brian, of course, with his 20 for both weeks. He touched it, and then it ever so quickly went away again. So he did not get his trophy, or I think he was hitting me up for a Tesla at one point. So he did not get his Tesla either. Here, let's see. This week, I'm not liking today's developments, though, listeners, because I was looking pretty good at the start of the show. I was at a 16.65 coming into the show, which was pretty close to where we were. We were at about a 16.5 at showtime. So I was pretty close to a bullseye yet again. And yet, unfortunately, the market thinks this is a holiday weekend, listeners, because they continue to crush it. They continue to erode it. We're at a 15.65 in the VIX right now, and Spikes is at a 15.70. I'm not liking this at all because the meatball was at a 15.79. So that puts him pretty darn close to a bullseye. And if he ever gets one, I'm never going to hear the freaking end of it. So unfortunately, so that just shows how difficult this game is, listeners, because I was winning. I had a bullseye less than an hour ago, and now the worm has turned yet again. This is a fickle mistress, Mr. Rock Lobster. I'm so sad I can't even talk anymore. You go first. Your compatriot won, even though you were horribly off the week before. I'll let you go first. No, actually, forget that. Not you. Let's have Simon go first, because he hasn't offended anyone.
Vindictive man.
I'm just a little bitter here. Go ahead, Simon. Where are you feeling for next week?
Well, given my earlier comments about the contango and how exciting that looks, I'm actually going to go for slightly higher given the drop we've had this week. So I'm going to go 16.2.
16.2. Interesting. I remember, listeners, this is a prognostication for both spikes and VIX, so it gives you a little bit of wiggle room there. If one is closer than the other, you can still claim a little bit of VIX. It's just too hard to predict the two, because then you have to start getting into analyzing the premium, who's going to be up this week, who's going to be over. There's a spread there that adds an extra level of challenge, which is fun, but for a lot of our guests, it's too much analysis to do. It's hard enough just wrestling down one number for these bad boys. All right, Mr. Rock Lobster, I deprived you of your chance, but I will allow you to go now. I'm too heartbroken to go second, so I'll allow you to go second. What are you feeling for this time next week, sir?
I think it actually, we might, if I have to do the overbee, I would say like the 13 handle. But I don't think we settle there just because of the nature of the beast. So in honor of Columbus Day, I'm going 1492 for VIX.
Oh, look at you being a little seasonal and also offensive at the same time. Because, you say Columbus, someone's going to get mad, right?
I'm sure somebody will lose their mind.
We'll have to censor that volatility pick. All right, so we got 1620 listeners and a 1492. Like I said, we're at pretty close to that 1565 level or so, 1570 or so level in spikes and VIX right now. I like Simon. I was leaning a little bit towards the upside too. Simon jumping there. So you know what I'm going to do? Because this has been a fairly aggressive crushing on the heels of not much tangible information. We've seen that before. It won't be the last time. I wouldn't be surprised if we see the aggressive crushing Mr. Rock Lobster was talking about, but I'm going to go pretty much close to where I was. Actually, you know what? I'm going to do it. I mock the meatball for it every now and then, but I like where I was this week, and it was working until it wasn't. So I'm going to go back there, 1665. That gives Simon a little wiggle room to the downside. It leaves the meatball to play by him, or the Rock Lobster to play by himself, all the way down there in the bottom in the doldrums. So we got 1665 on the upside, listeners, 1620 kind of playing the Goldilocks role in the middle, and 1492, Mr. Columbus Vol on the downside. All right, that's going to do it for the crystal ball. It's also going to do it for this episode of Volatility Views. Before we go, listeners, let's go back around the horn and see what everyone's cooking. John, let's start with you. You got the futures coming up on the 18th. What else you got cooking? What else can folks look forward to over there in the land of MIAX, sir?
Yeah, the MIAX team is going to be in Chicago the week, the 22nd through the 24th. We have a couple customer events. We may be crossing paths with any of your listeners. Looking forward to reaching out and touching them, talking to them. FIA at the end of the month, and then bear down for the release, and then look for a variety of very interesting proprietary products that we hope to begin to roll out through the beginning of the year and through all of next year. Some futures, some options, but all what we think relevant and create great opportunity for our members and the investing and trading public.
I have heard rumors, some rumblings about some of these cool proprietary products you guys have up your sleeves, so I'm looking forward to seeing some of those see the light of day as well. Speaking of cool proprietary products, Simon, you're always cooking up something cool. You've got, of course, you're the Spikes father, and we got the new Spikes futures coming out soon. You've also got your BitVol index. You got pretty much every index you could think of. So what can you leave our listeners with? What are some hints or teases of what's coming down the pike from you guys over there at T3?
Well, so I mentioned sort of about a month ago that there's sort of an interest rate thing cooking. Probably a bit too early to go into details, but there's something there. And we're also working with an exchange near to us, actually, believe it or not, New Zealand. It's not exactly a hotbed of financial innovation, but we've developed for them something called the Milkshake Index. That they actually have a complex, because New Zealand is a very big exporter of dairy products around the world. They have a futures and options contract, So we've made the milkshake index for them.
The milkshake. I was not expecting that. I expected the bond, maybe something else there. The milkshake index. You've surprised me again, sir, Simon. So well done. Well done to you and your team. We'll have to get you guys on the crypto show again one of these days to catch up on all things Bitcoin vol, because it has been moving a wee bit of late. I'm sure that bit vol has been pretty interesting to watch. And last but not least, the rockingest of lobsters, or the cold water lobster, depends what he wants to call himself, Mr. Rock Lobster. Folks want to check out your newsletter, so perhaps they don't have to do that crazy Ocjan quote-unquote roll. Where should they go? What should they do?
Yeah, if you want to learn to trade vol, just come to Option Pit, join my newsletter. We do a live class once a week. Newsletter, we now have text messaging for trade ideas and closing. I just say where I close my positions. And it's a pretty cool product. Obviously, today is a good day for us. OptionPit.com, the vol newsletter. And like everybody in our chat room was just saying, wow, I paid for my subscription for the next few years today. So it's not very much, $6.97 a year. And if you don't learn how to trade vol after a year following this newsletter, you should hang your hat and never trade it again. That's all I'm going to say.
Or just go back to trading your Ocjan rolls. One of them's got to be eventually.
Load up. And I hope it works for them. I really do.
Hey, go for it. Go for it. Check it out for yourself. You can go for it yourself there, listener. Check out the cool texting. It sounds pretty cool. OptionPit.com is the place to go. And on behalf of the Meatball and Mr. Simon and John and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great and insightful questions. Keep them coming. We love hearing from you. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. Listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.